Welcome back to the second half of the Future Show here on the TD Ameritrade Network. We just had some inflation data that just got released while we were on break. Let's have a look at some of it with our next guest. We've got Bob Iaccino joining us. He's standing by at the CME Group over on LaSalle here in Chicago on the trading floor at the Chicago Board of Trade. He's the chief strategist at Path Trading Partners and the founder as well. He's standing by to help us take a look at some of the data. Bob, it's good to have you with us. Let's get into the PPI numbers first. I'm noticing, for the most part, limited reaction too. I've got the dollar, which is currently holding right around 98.60. The indices are still holding upper levels. I mean, sometimes we forget that the PPI number gets a little bit less attention than the CPI number, the consumer price index, as it's a little bit more closely tied to us as consumers.
Yeah, good morning, Ben. Good to be on again. I think the PPI number has gotten less attention over the last, say, 7 years or so. And part of the reason is the onset of, we've talked about this before, what I call the Groupon economy, which I guess has now become an Amazon economy. A lot of production costs get absorbed by companies either through advanced technologies that allow them to absorb the production costs that might have affected prices in the future, and just the sheer weight of competitive pressures from online businesses. And that's not just limited to things like Amazon. It's limited to, it goes to things like Uber Freight, DoorDash, all kinds of things that are convenience metrics that don't have a traditional bricks and mortar infrastructure. So the producer prices affected the economy less and less, and therefore affected market moves less and less over, say, the last 7 years or so.
Yeah, Bob, I mean, it also sort of points to the limited impact that tariffs have had, in theory, on some of these producers. I mean, some of the producers we've heard from that have actually felt an impact from have said that they're going to absorb them and not necessarily pass them on to the consumer. So that also provides some of the disconnect there in terms of direct correlation.
Yeah, and question for you, Ben. How long before I lose people saying the Groupon economy? How old is Groupon now? People don't even know what that is. Well, you're talking about somebody like Walmart, for example, who can take some of these tariffs and spread them across such a wide base of products that they're barely noticeable to the consumer. If you get a 10% increase on a TV, which might be $100, they can put 50 cents on 200 different products and absorb that in, and it doesn't really matter on the consumer end.
All right, Bob, let's talk a little bit about, as you mentioned, well, actually, before I get into the CPI number, the Groupon is a big name here in this building on Chicago Avenue here. I mean, they are written across the top of it, but more closely watched, we've got the CPI data, which is coming our way tomorrow. What are you looking for there, Bob?
Yeah, much more important figure. You know, looking across the next couple of days, really, Ben, of U.S. economic data, that CPI and that retail sales both expected to come out muted, and that would fit in with the sort of broader macro picture that we've seen lately of slightly slowing data, especially in the U.S. Started out in Germany and then bled to the EU, and has now seemed to come over to the U.S. with the ISM numbers we got, well, I don't know, maybe that was a week ago, 10 days ago. And then you take it, the retail sales is where I think we might see a surprise, not because I have a crystal ball, but simply because the consumer has still remained robust in everything except maybe that prices paid side of the ISM, which again is still manufacturing and industrial based, institutionally based, but could be a little bit of a bleed, a little bit of a leading indicator, only because those two figures seem to correlate. When you start to see prices paid in the ISM fall, you start to see the consumer suffer a little bit a couple of months of numbers later. This is probably not enough to absorb that, but both are expected to come in muted and continue to reinforce that the Fed really has an opening to do 50, but probably won't.
Noted. Bob, what is this? Well, potential expectations, anticipation of the retail sales, the CPI, and today's PPI numbers that we just had released. What does this all mean for the U.S. dollar and the trend that it's been on to the upside?
Well, the same trend, I guess, Ben. And again, you have room in sort of the industrial data, the macroeconomic manufacturing data for the Fed to do 50. But it doesn't seem like they're going to. 3 or 4 days ago, we had the sort of 6% chance, 6% probability that was built into Fed funds futures of a 50 basis point rate cut by the Fed September 18th go to zero. And we now have about a 6 or 7% chance of no rate cut. Now there's going to be a rate cut September 18th, but how the Fed plays that out is very much dependent on them pointing to things like the PCE deflator, like the PPI figure. And again, if retail sales comes in even milder, I think that goes even lower and it becomes almost a done deal that it's going to be 25. And then they're going to try and get us to believe that they're going to pause. I think that's the rhetoric that we're going to see based on this next set of numbers.
Bob, while we're on the topic of central bank activity, let's talk ECB expectations for tomorrow. QE or not to be, I guess, is the question.
I think Mario Draghi has a really hard time giving the market what it's currently pricing in, which is rate cuts and QE and a full startup again of the stimulus package. He has gotten so much pressure from various aspects of the European Union, various places in the European Union, from Germany, from the Danish Central Bank, from people on his own ECB governing council, that he may dial that back a little bit, and it's really a lose-lose situation for Mario Draghi in the current situation. If he does too much, we get inflation. If he does too little, he's blamed for the recession, which is probably already going on in Germany. Yeah. Which that means it's going on in the EU in the next quarter. Yeah. So I expect to see some QE. I expect to see some easing of capital requirements at the central banks. And then I expect to see tiering, which is something that's been talked about the last few days, and that's TIER, not TEAR. Tiering would be sort of an exemption from that negative rate on the deposit rate for certain loans. Banks have come to Mario Draghi lately and said, look, if you continue to bring these rates negative, we're just going to cut our lending because we don't want to lose money on the negative deposit rate requirements that we have for money that we've lent out and savings that has come in. And that's the savings rate is the key. People forget about this. People love negative rates from a borrowing perspective, but the savings, if you have $10, $20, $30,000, you are actually likely to put that in a safe in your house, or sort of the philosophical under the mattress, than you are to put it in a bank at 0 or negative rates. That gives the banks less, especially the small regionals, less money to lend out. So it could actually hurt lending the lower these deposit rates go.
Bob, one more question for you, and then we'll let you get on with your day. I wanted to get your thoughts on the latest in Brexit. It looked like Boris Johnson was going to have his way suspending Parliament, but I heard this morning that Scotland has ruled that it's illegal for him too, and it sounds like they're going to still continue to battle this one out in the courts.
Yeah, that's going to go on in the courts, and it almost doesn't matter at this point, simply because he's had 6 legislative losses in a row. Yeah. He's now basically forced by law to go try and get a new deal out of the EU. We'll find out more about that on October 17th when the EU meets and considers whether they're going to offer a new one or not. That's really the wild card. If the EU just says, no, the deal's been done already, Boris, work it out, then we have a little bit of chaos coming into the pound.
Yeah, and then you'd expect this 124, 125 area to prove to be a bit of resistance. Bob, really appreciate you joining us for a look at the currencies, the number released this morning, and to preview a couple numbers headed our way for the rest of the week. That's Bob Iaccino, the founder and chief strategist at Path Trading Partners, joining us to talk currencies. I want to move on over into